I think the real estate industry is kind of awkwardly in the middle of all of these vectors. And it's not super clear to me which is the most compelling to them. But what I can say in aggregate is it's all working, because the behavior and the disposition of large real estate companies with respect to new technology solutions to decarbonize, it's radically different than 5 years ago when we started our climate fund. And I think it is a mix of carrot and stick. And I think what we will see, and this is probably a longer conversation, is I think we will see some owners truly embrace this, like what Tom Steyer's doing with his business, where they will be able to demonstrably prove to the market that they have a cost of capital advantage by virtue of being the most energy efficient real estate operator. And debt investors get that, equity investors get that, and that enables them to scale in a way that no one could before them. We haven't yet seen that, but I hope we do, because that will really send a signal to the market.
Welcome back to another episode of Renewable Rides. And today we're diving into how the commercial real estate industry can transform energy from being a cost center into a profit center. We're thrilled to have Brendan Wallace, who is the CEO and CIO of Fifth Wall, join us to discuss this groundbreaking intersection of real estate, technology, and energy. Brendan will walk us through Fifth Wall's mission to decarbonize the real estate industry and share insights on why real estate owners must start thinking of their properties as more than just buildings. They're becoming power plants. If you're a business leader looking to future-proof your assets, this conversation is a must listen. And if you enjoy it, please share it with one of your friends or colleagues. Cheers and enjoy the show. Brendan, welcome to the show. We'd love you to give us your elevator pitch on Fifth Wall and what your mission is.
Yeah, well, thank you for having me. So I'm Brendan. I am the co-founder and CEO and CIO of Fifth Wall. And Fifth Wall is, I'd say, the largest, the most active, probably the most synonymous investor with built world technology, which, as we define it, is what is historically been called prop tech. So consumer software, enterprise software, marketplace software for the real estate industry. But also we have a series of climate funds as well that are expressly focused on how we need to decarbonize the real estate industry. So those funds invest not in just software, but software, hardware, materials tech, industrial IoT, building electrification. Across the whole platform, we manage $3.2 billion across 9 different funds. And we're kind of scattered across the world now. We started in LA, but now we're in about 6 different offices. And yeah, we're just really passionate about how technology and energy are colliding with the real estate industry and deploying capital against that big secular trend.
Yeah, absolutely love that. And I think what I like most about your commentary is you're one of the few people who's talking about real estate being such a massive emitter. 40% of the market, I believe you were saying yesterday.
Yeah.
And yet, and you're saying trillions of dollars need to go into this. But when you started Fifth Wall, less than 100 million had been invested.
Yeah.
Are you seeing that unlock? And what are you seeing driving sort of the money being released into the decarbonization effort?
Yeah. So, maybe to put some just numbers behind how big, but also how challenging and how daunting the decarbonization of real estate is going to be. It's estimated that it's going to cost $18 trillion to decarbonize buildings and homes in the US, which is just a stat. It's hard to even get your head around a number like that. But to kind of compare that on a relative basis to what was going into the climate tech needed to decarbonize buildings and homes, historically, we did analysis before we started our climate fund. And look, it's imperfect because not all this is disclosed, but what we did look at is we looked at all of the public REITs that were out there, and we looked at all of the investments they had disclosed in their filings.
Yep.
And we added it up over the course of 10 years, and I think the number we came to in aggregate over the course of 10 years for every single REIT was like $96 million that have been invested into climate tech. Now, climate tech is not a holistic solution, so you're not really comparing $96 million to $18 trillion, but clearly you're way off.
Yeah.
And so we set out to raise our first fund to dramatically increase that number. And we've been fortunate. We've had some of the biggest owners and operators and developers of real estate invest in our fund. Firms like Host Hotels and Equity Residential and Hilton and Related and CBRE. We've had now about 110 real estate owners invest in this platform.
Nice.
But we've taken that number now to 800 million in specifically climate capital to decarbonize the real estate industry. So it is still very small in terms of being a drop in the bucket towards 18 trillion, but we've 8x'd the amount of capital that's flowing into this space. And I think that is really exciting, honestly.
It's so good. And I think you're in a very unique position of seeing that intersection of the built environment, energy, data, software. You know, I see your commentary around more buildings need to be thinking about being power plants.
Yeah.
What excites you about that concept? And do you want to expand on what you mean about that?
Yeah, I mean, I think, the real estate industry is undergoing really a sea change in like what it means to be a real estate owner. I think the business of real estate was historically thought of as like very simple. Like, you don't need to do technology, you don't need to do energy, you're just doing real estate, which is, you maintain a box and people do things in that box. They shop or they live or they work or whatever it is. But increasingly, a lot of responsibility has been thrust on real estate owners. And one part of that responsibility is to, as you said, be a power plant. And that's the last thing that I think anyone who entered the real estate industry thought they'd be doing or wanted to be doing, but it's now the imperative. And the reason is we have a grid that's under a lot of pressure. The way we generate energy needs to become more distributed, meaning we can't just have unidirectional flows of electrons from power plants and substations to consumers of energy. We need to actually be producing energy at the edge, even down to individual homes, and being able to use that throughout the grid. And there's just an imperative around tenancy for landlords to do this. On the one hand, if you don't have enough EV charging at your asset, you're not going to be able to lease your space to certain office tenants. Certainly in the multifamily space, that's the case. But also, if you don't decarbonize and kind of invest in the right energy infrastructure, you won't be able to attract certain tenants.
Yep.
So the responsibility of buildings becoming power plants, I don't think it's necessarily something the industry wanted, but it has been thrust on the real estate industry. And it requires, I think, real estate owners to be very strategic in looking at their asset. It's not just energy efficiency, it's on-premise renewables, it's on-premise storage, it's EV charging, microgrids, virtual power plants. It's understanding how you can monetize it through multiple different channels. And I think this is pretty foreign for the real estate industry. And so I like to think Fifth Wall has been pushing or encouraging the conversation in that direction. But it's still very new for real estate owners to self-conceptualize as being in the business of power plants.
Yeah.
But they are.
And you interviewed Kevin, chairman of Lineage Logistics, this morning. They're one of the shining lights of setting a really positive example here. They're deploying on-site energy systems, being super efficient with their energy consumption. And businesses like Lineage, Walmart, Target, they're actually using it as a way to differentiate their business and, like you say, attract customers, employees, investors. I saw one of your posts where you're like, I'm flying over all these rooftops.
Yeah.
Why haven't more buildings got on-site solar? And
yeah.
I think today it's less than 3% of buildings have on-site systems. What do you think the barrier to adoption is, when you talk to executives and leadership teams?
It's a great question because, I made that comment, and it's kind of a ridiculous comment, but nonetheless, it's true. Right? Flying over any city and look out at the rooftops, and you're like, well, we already know levelized cost of energy is cheaper when you have solar. Even if you're still relying on fossil fuels from the grid, it's just cheaper to have solar. And yet, there's not a lot of it. And as I see it, it's just because the real estate is this industry that moves at a glacial pace. And so it's not I don't think it should be surprising to anyone that the organizations that have most enthusiastically embraced solar are retailers, right? The Walmarts of the world, the Targets of the world, because they've always had an operational intensity that has caused them to use technology or use operational advantages like at the core of their business. Real estate's never really had to do that. And as a result, it just takes a long time for the real estate industry to digest these changes. I mean, you think about cell towers, right? And the opportunity for digital infrastructure on roofs. I mean, that's been an imperative for 3 decades now. And still, a lot of real estate owners haven't evaluated that opportunity. So I think what we're just confronting is maybe a sociological or like an anthropological problem of like, real estate needs to change its posture with respect to technology and innovation. And when it does, the other 90% of roofs, 97% of roofs are going to be in play, and that's a big opportunity. So I know that's not a super heartwarming, satisfactory answer, but I think it's the truth.
Yeah. I think the reality is business leaders want to run their business, don't they? And they've never had to think about energy ever.
Exactly.
And now to your point, they're being expected to because costs have gone up. Yeah. Outages are impacting their business. They're now being expected to be more sustainable. And I think something I've heard time and time again through the conference over the last few days is we need to make it super simple.
Yeah.
And we need to unlock the opportunity for people to see these value streams. Do you think business leaders are realizing yet that sustainability actually means greater profitability? Or do you think they still see it as a trade-off of you have to do one or the other?
It's a great question. And I don't know exactly where we are, and I'm sure it varies a bit by geography and by asset class, but you kind of have the carrot, the profit incentive, a cost of capital advantage that might be conferred through decarbonizing faster, and then you have the stick, right? You have fines and regulations and negative press, right, that might come with not doing so. And I kind of think about all of the real estate industry as being at the center of like 3 vectors. One is capital markets, one is local regulation, and the third is just the demand for real estate itself, so tenants. So capital markets, clearly we know today that more energy efficient real estate trades at a higher multiple, right, and lower yields. And there's real cost of capital advantages, and large allocators of capital have said we'll preferentially deploy capital to low or no carbon footprint real estate. That's happening, that's been happening for years, and I think it's only going to accelerate. I think there's a lot more room for that to happen, and there's a lot more transparency around which that can happen, but that's just starting. That's more on the offensive side of things. And I think some owners, typically the largest owners, are seeing that. You look at what Prologis is doing and kind of huge footprint real estate owners, they're starting to take advantage of this cost of capital, scale advantage in deploying technology across their big footprints. The second is regulation. Now that's more of a stick. And the way I see that is real estate is taxed and regulated locally, not federally. And local regulators have said we want to drive compliance with our decarbonization efforts, and we're just going to tax you, right? You can't move real estate, so it's very easy to tax. So there's things like Local Law 97 in New York, and the way I see that is just kind of bending the cost curve, kind of pulling the ROE frontier in terms of making owners justify it. But that's clearly the stick that's also driving behavior. And the last is tenants, which is some large national footprint retailers and companies like Google and Meta and Walmart. They've said, we're not going to lease space from you unless you adhere to certain sustainability criteria. Right. And so that's the private market speaking. I think the real estate industry is kind of awkwardly in the middle of all of these vectors. And it's not super clear to me which is the most compelling to them. But what I can say in aggregate is it's all working, because the behavior and the disposition of large real estate companies with respect to new technology solutions to decarbonize, it's radically different than 5 years ago when we started our climate fund. And I think it is a mix of carrot and stick. And I think what we will see, and this is probably a longer conversation, is I think we will see some owners truly embrace this, like what Tom Steyer's doing with his business, where they will be able to demonstrably prove to the market that they have a cost of capital advantage by virtue of being the most energy efficient real estate operator. And debt investors get that, equity investors get that, And that enables them to scale in a way that no one could before them. We haven't yet seen that, but I hope we do, because that will really send a signal to the market.
It was interesting. We actually just helped close a deal for a cold storage warehouse in Northern California yesterday. We run a marketplace competition for them to reduce their energy costs, to be able to compete in the market, increase their margins. We're able to help them secure a 20-year energy deal at 8 cents a kilowatt hour, and they were paying the utility 25 cents.
Wow.
So it's over $25 million worth of savings.
Yeah.
And that's just amazing, isn't it? And if you think about businesses doing that across their entire portfolio, the compounding value of that is huge. And then it gives you that cost of capital advantage and the margin to actually go and really accelerate your business.
Exactly. And I think also, the energy savings is also I think because real estate is in this odd position sometimes of not paying for its own electricity.
Yeah.
It creates this weird disincentive. There's this kind of transparency barrier between, what's the tenant's responsibility and what's getting passed through the tenant. Now, the laws of microeconomics mean that if cost of occupancy is higher because you haven't invested in these solutions, you're still paying for it in the form of lower rent. But I think landlords sometimes miss that, which is why I don't think it's surprising that spaces like the hospitality industry that pays their own energy bills are most focused on this, because they immediately capture the savings they're able to generate by virtue of these investments. So the kind of triple net structure that characterizes a lot of leases in real estate, I do think is a barrier in and of itself to the adoption of a lot of new solutions.
Yeah, but you think that might switch as the economics start making more sense?
I think so, because I think increasingly tenants are just going to look at the all-in cost of space. And the all-in cost of space is obviously inclusive of energy costs. I wouldn't rule out that some real estate owners take a different posture and say, we actually want to be energy providers to you. We want to be your utility. I know it's not happening a lot, but if you are best in class at being able to generate clean energy on premise and store it, you should be the best at monetizing it. And that means you could monetize it to the tenant or even back to the grid itself.
That's right.
And I just have to believe that really entrepreneurial landlords will start to do that. Although we're not really seeing that today, I think that's the promise and that's the potential of where we could go.
And then I've loved seeing your excitement the last few days about data centers and how they're willing to take maybe more risks and innovate more because of their constraints around just being able to get access to energy where they need it.
Yeah.
Do you want to just expand on what you're seeing in the market and why you're so jazzed about it?
Yeah, I mean, kind of what we've all seen is that the demand for computational real estate has exploded. It's oftentimes just linked to AI, but it's more than that. It's AI, it's cloud, it's a whole bunch of things. But suffice it to say, the footprint of data centers in the US and the world is going to explode. And what that has drawn out is that the computational real estate industry, data centers, is inextricably linked to the energy industry, because that space, that three-dimensional space, is so energy intensive, right? The computation itself, then the cooling of it.
Yep.
And we then therefore have the potential to actually roll back years worth of progress or even decades worth of progress economy-wide in energy efficiency. Like all the savings that we've achieved that have been hard won for years and decades, we could unwind.
It's gobbled up
by AI and by data centers, and that's really sad. Now, that's I would say a negative lens in which to view this kind of curveball. The positive lens is that it's really changed the behavior of data center owners. Data center owners are increasingly thinking of themselves as energy businesses, more so than any other asset class of real estate. They are grappling with the reality that they might not get connected to the grid for 5-10 years and maybe never.
Yep.
And so they have to be an energy company and they got to figure it out on their own. And what that's done is kind of thrust a entrepreneurialism on them around energy. If I'm being totally transparent, I think not all of it is green and clean. I think they just want electrons.
Yep.
But the fact that there are strong incentives to be green and be clean and the fact that you can develop now clean energy so fast, and the levelized costs of solar is so low in many geographies, means that data center businesses are going to develop a lot of clean energy. That's a silver lining that I don't think anyone actually would have budgeted for even 12 months ago, but it's happening. And it's really exciting, I think. So yeah, I know I talked a lot about that yesterday, but we're seeing that in Fifth Wall's strategic LP base. It's awesome. So
that's great. And then hot off the press, 0.5% interest rate drop today.
Yeah.
How do you think that's going to change the landscape?
I've had all of like 2 minutes to react to it. It's good. Yeah. It's good for, I think, what everyone is working on in this room. It feels like perhaps a lot of that was baked into rates and baked into equities. But long term, I guess what I don't want to do is react too much to it, because we're in the venture business and we're in the energy transition business. And so it's almost counterproductive to think kind of quarter to quarter. Yeah. You really want to think kind of year to year, and decades. Honestly, even like 5-year increments. And so we try not to be too reactive to short-term movements, because that's the nature of venture capital. But we have to be realistic, and it's a good thing. So I think we're happy. But I also want to make sure that everyone who's in this space is tempering their excitement around these moves, because look, things could change in 6 months, and the imperative to decarbonize assets, the imperative to invest in clean energy, the challenges of entrepreneurship, none of that is going to change whether rates are 50 points higher or 100 points higher or lower. So I try not to get too wrapped up in the day-to-day, movements. But I was actually expecting, when it was announced, I thought I'd hear like a cheer from inside the main stage. Yeah. So just to wrap up, because you've been very kind with your time, on a personal level, what are you passionate about? I'd say what I'm most passionate about is this intersection between real estate, technology, and energy, which, as I see it, is where Fifth Wall sits, right? I think we are the dominant asset management brand at that intersection. And the incarnations of that today are venture capital and growth equity and some public market stuff that we do. But long term, I just think that's an intersection that's going to become more trafficked, and really interesting businesses are going to be built there. And I'm just really excited to be there. Meaning, like, I'm actually most excited about what we don't know about that's coming. And when we kind of do our planning internally about what are the themes that we're most interested in, it's always so interesting to me that like the same themes keep popping up over and over again, but the form in which we might pursue them is different. So, historically we were investing in stationary batteries, and then that converted into, consumer-facing EV charging. Now it's enterprise-grade EV charging. Now it's pad sites and substations. And, eventually it might be edge data centers, but it's all part of the same kind of secular theme. And so what I think is so exciting is like we've built this really unique position in the asset management world, where the sea change that has happened in real estate on account of technology and the energy transition is something we can help and speed along. And I'm just really excited to keep doing that. So in that tone then, or to follow on from that, finish this sentence for me. Yeah. In my career or life, I will have been successful when? I will have been successful when the real estate industry truly has internalized that it is both a technology industry and an energy industry at the same time. And that realization, I hope I and Fifth Wall can be the instigator of. Love that. Great way to end. Really appreciate your leadership. Thank you for lobbying, cheering on, and driving the real estate industry forward, because I think this is the opportunity of a generation for most businesses. I agree. And if they embrace it and get after it, they'll win. And if they don't, they'll be left behind. So thank you for all you do. Definitely. Thank you for having me on. Appreciate it.
Hey Dan, welcome back. It was a shame you couldn't join Brendan and I on that interview. That was definitely one of my favorites. But I know you've had a chance to listen to it, reflect on it, and would love to know what your takeaways were.
A shame or a sad that I wasn't there is an understatement. That was one that I was looking forward to, but glad that you were able to sit down with him in person there at Blueprint. I was at the Net Zero Forum at the same time, meeting with a wide variety of others across retail and manufacturing and large commercial real estate asset owners. And hot off the press, it was awesome to be able to listen to it within an hour or two of you guys recording. So I appreciate you sharing that. For me, the thing that I really appreciated from Brendan's point of view, so he started Fifth Wall having seen this opportunity within the built environment, within commercial real estate, to help them adopt more technologies and help foster new technology and innovation for this whole space. It's one of the biggest, if not the biggest, industry in the whole world. It's been a pretty kind of old school business for many years, and there's so many opportunities for bringing in new technologies to increase NOI, to bring more efficiencies to operating, to bring new materials into buildings themselves. And so to hear him talk about this nexus between the built environment and commercial real estate and decarbonization and energy and technology is fascinating. And what struck me was his commentary around the real estate industry being relatively slow. I mean, this is infrastructure, and it's not too different from the energy landscape that tends to move on the slower side. There's highly regulated, and these are also infrastructure projects. And so I think the opportunity is for enabling technologies to help these commercial real estate asset owners, the asset managers, the property managers, the facilities managers, understand where is their opportunity, what can I do that is beyond just operating, I think as you called it, filling a box, but how do I now become a bit of an energy player? And do I need to hire a massive team to do that? No, not necessarily, because technology is there to support that and bring it along. So knowing we're just still at the very early stages, sub 3% of on-site energy deployed, but even in the past 6 months, certainly 12 months, and hearing some of Brendan's comments there, it's really worked its way into nearly every executive team, every boardroom. Energy is now one of those top topics within those groups. So you were there with him. You were spending time at Blueprint. What were some of your reflections?
Yeah, I think just building on your point, I think, Dan, that these are traditionally lean teams, and they're managing massive portfolios and a lot of real estate. And the challenge has always been, how do we maximize the use of the box, as you put it, and whether that's people, whether it's hosting product. And no one comes into real estate thinking that they're going to be focusing on energy, AI, and trying to be creative around the future of real estate. And the real estate industry has been under a fair bit of pressure, and there's a fair bit of discussion in the conference around, there are some headwinds right now between interest rates, between election uncertainty. I don't think people necessarily mind what the policies become. Is they just want certainty around what policies they've got to deal with in order that they can strategically plan and deliver on that. So I think that uncertainty is cramping some decision making. And then the reality is, the whole back to work for commercial real estate in general, it's starting to happen, but it's probably not happening maybe as quickly enough as the industry wants or needs. And so there's opportunities here for real estate owners to be really creative about how do they take this asset and make it into an even more profitable, lean machine of a business. And these are incredible business leaders, and they've had a huge amount of responsibility thrust onto them to adopt a bunch of new technologies, to adapt to a new environment. And I think it's super exciting. I think the reality is that these assets can go from being passively sat there, being filled, to now actually actively participating in many parts of the market. And I think particularly from our standpoint on the energy side, it's, how do you not only get your own business in order and get energy costs down and be more sustainable and be a good community member, but then how do you maximize that asset to then look at different ways to generate revenue? And I think that's when the industry can really take off. And for me, for sure, the interview with Kevin Marchetti, the chairman of Lineage Logistics, was a massive highlight. There's a business, biggest IPO of the year, really setting the example and the standard for what businesses can do when they truly challenge their culture and values to get after it and, optimize the business at every step of the way. So yeah, it's really enjoyable. And I really appreciate that Fifth Wall is trying to bring all of these trends together and empower the real estate industry to really get after this opportunity.
I reflect on the fact that real estate and the leaders within real estate are some of the most fundamentally sound business leaders when it comes to driving, sound economics, driving revenue and profit to the bottom line. And this is a new area of opportunity for them, both in creating new revenue streams, in attracting or retaining tenants, being able to charge a premium in some cases, because more and more companies are not just concerned about, maybe it's decarbonization, maybe it's reliable power, maybe it's just power in general, because they are a power hungry organization and they need access to it, and they're not going to be able to get access to it for 3, 5, 7 years from their utility. And so to hear Brendan reflect on, you had asked him the question, which I think it was moments or certainly maybe within the hour of the Feds announcing the 50 basis point drop in interest rates, but Brendan not reacting to it and saying, really, we can't be on this, quarter by quarter, even year by year. It really needs to be more like every 5-year cycle. And I think commercial real estate does think in the longer term because of the nature of their assets. They are decades and decades long assets, which hopefully bodes well for the adoption of some of these energy systems, because you do need to think in the longer term and see where things are going, understand that these are assets that last 15, 20, 30 years, but that they can reap tremendous benefits, both for your own business, but then for your tenants and those that occupy the buildings. Yeah. So it's an exciting time. And I've been encouraged by some of the more recent conversations I've been having. While I was at the Net Zero Forum, I was sitting for several hours with a leader that we may end up having on the podcast, who is a part of a commercial real estate asset owner and asset management firm. And it was interesting hearing from him of really trying to drive this new way of thinking within his organization. And it sounds like folks are starting to come around to it. So encouraging times ahead.
Yeah, the best quote from the conference was Kevin's, where he said, the best advice he ever got was build a business as if you're going to run it and own it forever, because then you're not looking for those short-term wins. You're actually, realizing that it takes time, it takes patience, but it takes innovation. It takes challenging yourself. It takes hiring the best people, building the best culture, and positioning yourself to succeed in the long term. And I think that's the key, isn't it? How do we balance the short-term wins, which there's those no regret decisions we talk about, with then positioning ourselves and our customers and the real estate industry in general for those long-term transformations, because that's what's at stake here.
Yeah. Well, I really appreciate Brendan taking time during the conference to sit down with you. I look forward to meeting him very soon, and excited that we got the chance to have him here on the podcast.
Right. Until next time, catch you then.
Sounds good. Take care.
We receive a lot of questions from business leaders around the world wanting to learn more about the energy transition, what is possible, and where to start. So to help you stay informed and up to date on best practices, opportunities, risks, and success stories, we created an industry newsfeed at VECKTA.com/news with all our podcasts, blogs, and newsletter. Check it out and connect with Dan, myself, and the VECKTA team to learn more. Cheers and have a good one.